All right, we're on our last partnership that we're going to study in our class. And this is one of those business entities that is much more valuable to, people that are trying to make a good living and do things ethically. It has all the benefits of a corporation, and it also mixes together a partnership with it, so benefits of both. So it's a really positive business entity. The problem is, in the state of California, there's only 3 types of business that can do it, and that's attorneys, accountants, and sometimes architects. Doctors are not allowed to be a limited liability company in the state of California, and that is very different than in some other states. So let's get into it. Please read your chapter objectives on your own. So I've given you the 3 main groups in the state of California that are allowed to be a limited liability partnership. In California, doctors currently are not. And what's really nice about this is everybody can kind of have the informality and the great taxes of a partnership while still maintaining their limited liability. So general partnership, we found out everybody has unlimited liability. Limited partnership, we found out only the limited partners have limited liability. And here, everyone gets to participate in management if they so desire, it's agreed upon, and they can keep their limited liability. It's also a lot easier to form than a corporation, so it has some really nice features. And this will be back to the my mnemonic device, which is Oompa Loompa, so Rupa and Oopa. And remember, I'm not trying to be derogatory towards anyone, just remembering that auditory sound. Help me remember Rupa and Oopa. And Rupa will apply, and because it's Rupa, it's much more similar to a general partnership than it is to a limited partnership, which is under RULPA. So profits and losses will be shared equally unless it's agreed otherwise in the partnership, just like with a general partnership. And every business entity we talk about, don't forget those 8 types of paperwork that we've been talking about since the beginning of the class. Now, the public document is kind of a funny name in the state of California, and it's called Registered Limited Liability Partnership Registration. Okay, I don't know why we had to have register in there twice, but we do. And you would go to the state Secretary of State, so California Secretary of State, if you were in California, and you can just read on your own what's required to be in the public document. Now, it's very important to file this document correctly as the paralegal for the client because they don't have any limited liability until we file it correctly. All right, the partnership agreement is going to be very similar to a general partnership agreement. So that's a good way to remember it, so you don't have to memorize things over twice, so to speak. The financing is easier because there's more people than the sole proprietorship, and people have limited liability, so they're more willing to put up some funds. And management is everyone can contribute equally to management if they so desire. And if there's nothing in the partnership agreement, no matter how much a partner puts in, they are going to manage equally. All right, liability. Again, we've got almost always full liability. Now, some states are still partial shield versus full shield state. So in a full shield state, all partners would be indemnified or held not liable for the contractual or tort errors of their fellow partners. So what's a tort? A tort is like a personal injury. So if somebody injured another. In a partial shield state, you'd only be having limited liability for part of that. So you can read the examples on your own. I think it makes more sense if you read these on your own. And limited shield, an example would be New Hampshire. So read those slides on your own in depth. It's good for preparing for quizzes. Let's look at Arthur Andersen. So when the economy tanked a while ago, there was a big Enron scandal. And Enron was a power company, and Arthur Andersen was their accountancy law firm, and they were supposed to make sure that the books that Enron kept were correct and not hiding losses. Unfortunately, Arthur Andersen allegedly helped Enron cover some losses, and people got screwed. The shareholders got screwed. Teachers' pensions that had invested in Enron got screwed. So Arthur Andersen was sued, and here's the kicker. The LLP is always responsible for the actions of its members or partners, so it can be held liable and end up having to dissolve. All right, continued existence of business and transferability. Please read on your own. Profits and losses. So everything's going to be shared equally, just like in a general partnership, unless the partners stipulate otherwise in a partnership agreement. Taxation is the same as for all partnerships. The tax is not paid by the partnership. They file a 1065, which is matched up with individual partners' K1s, and the partners pay the taxes. The tax passes through partnership onto the partners. Determination you can also read on your own. So, much easier business entity, and quite frankly, much better and less subject to abuse than the limited partnership.